If you already know what funded trading is, you've probably seen people managing accounts of $100,000, $200,000, or even $500,000, and they often claim it's risk-free. So, are they using real money or just demo accounts? In this video, I'll explain how prop firms work, where the profits shared with traders come from, and what you need to research before investing your time and money. One of the most common concerns people have is whether prop trading involves real money or if everything is just a demo. Why does this question arise? When you take the evaluation, you're given $100,000 in a demo account. Once you meet the target, you sign a signal provider contract, and your profit-sharing account is also a demo account. This leads to two key questions. Why is prop trading done in demo? If everything is demo and fictitious money, where do the profits shared with traders come from? Let's start with the first question. Why is prop trading done with demo money? The answer is straightforward. If a company gave you access to real money that wasn't yours, and neither you nor the company had the proper licensing, both would face legal issues. Managing third-party capital without a license as a brokerage or investment firm is illegal. But then, where do the profits come from if it's all demo? When you pass an evaluation, you sign a signal provider contract. At that point, the prop firm may replicate your trades in a corporate account. In other words, the trader operates a demo account, but the prop firm mirrors those trades in a live account. And this is completely legal. Now, here's where the advanced questions come in. Does the prop firm have a corporate account for every trader? Obviously, it's impossible to manage 400,000 individual $100,000 accounts. Nor do they replicate 100% of traders' entries. This would be unfeasible and unnecessary for one simple reason. There's a statistical measure known as VAR, value at risk, which is a method for quantifying market risk exposure using statistical techniques. A trader might pass an evaluation and even be profitable for a while with a very high VAR. However, statistically, 80% of traders don't just lose money, they blow their accounts within the next 8 months. For this reason, a prop firm cannot simply mirror every trader's actions. At the end of the day, it's a venture capital business, and they must manage internal risk. Passing an evaluation doesn't necessarily mean you have a winning methodology or long-term talent. Success could be due to luck, though in most cases, it's because the trader has skill, like my students, who are passing their evaluations without taking reckless risks. Summary: think of it this way. For the prop firm, it's like having a pool of traders, each with their own strategies. To the company, every trader is an asset, and together, all the traders form a portfolio. Based on these different assets, the risk management department makes decisions using certain risk parameters like VAR and many others. Ultimately, they execute trades in the real market with adjusted risk. So, the firm doesn't have a separate corporate account for each trader. Instead, all trader accounts are connected to the corporate account. If, based on risk management, they decide to enter the market, profits are generated, and the firm chooses to share those profits with the traders. Why is it important to find a firm with sufficient liquidity? Sometimes, not all payouts have been generated directly from market activity, but the firm remains committed to paying them. It's crucial to note that it's impossible to mirror every single trade from every trader perfectly. That would be misleading and unfeasible. If they decide, based on risk management, to enter the market, the profits generated are shared with the traders. Now, here's a question for you. Why is it important to find a prop firm with sufficient liquidity? Because sometimes, not all payouts or commissions received by traders are generated directly from real market activity. However, the firm is committed to paying them. If it lacks sufficient liquidity, it could go bankrupt, as has happened with some firms in the past. The million-dollar question: what should traders look for before investing their time, money, and effort into passing an evaluation and trading with a prop firm? 1. Thoroughly investigate the company. Find out who is behind it. What do they do? What have they done before? What other companies do they manage? How much capital was invested in the firm? How much liquidity do they have? As their corporate transparency? If they're doing things right, they won't hide information. As you can see, I lead by example. I've done this research myself. If I recommend a company, it's because they've opened their doors to me, I've met their top executives in person, and I've seen everything behind the scenes. That's why I chose to work with them. 2. Look for firms offering evaluations in futures. If you're still skeptical, choose a prop firm that works with futures, as there's no room for manipulation in that market. Offering futures and multiple futures platforms is a clear indicator of a serious company. It's not as simple as just reaching out to a futures data platform and saying, "Hey, give me access," and getting it handed to you. Access is only granted to solid, well-established companies. It's easy to have a CFD platform, but it's much harder to offer several futures platforms. 3. Multiple futures platforms. Offering futures and multiple futures platforms is a clear sign that the company is serious. It's easy to set up a CFD platform, but having access to multiple futures platforms is a challenge. Only solid companies can achieve that. It's easy to set up a CFD platform, but it's much more challenging to offer multiple futures platforms. 4. Liquidity and size of the corporate account. In the prop trading firm where I'm funded, or where I passed my evaluation as a reference, they had over 43,000 clients worldwide in 2023. The firm paid out commissions to its profitable traders amounting to €3 million, all from profits generated through their corporate account. This gives you an idea of the scale and financial strength of their corporate account. Which company is it? Since I believe I can't name it directly in the book, I've included a QR code here for you to check it out. I'm sure some of you are already eager to get started and wondering how to take the first step. First, be patient. If you're reading this book, it's because you still need training, otherwise, you wouldn't be reading a book titled Trading from Scratch. There's no point in building a house starting with the roof. Don't expect to make money without investing in yourself. And that's where I can help. If you want to progress and move faster, head over to jamiedways.com, click on Become a Premium Student, or request an informative meeting. The information you'll get there is far more comprehensive than anything you'll find on YouTube or even in this book. Remember, the training is designed to help you master trading, become consistently profitable, and pass evaluations like the one I completed live with my students. I passed it using the Pentode trading system, which I'll teach you, and all our results are fully audited itados. If you feel you already have enough training or want to try your luck, move on to step 2, open an account. It's just a standard registration process. Step 3, once you pass the evaluation. Because I guarantee that if you follow our system, you'll pass without any issues. When that happens, tag me on Instagram. We'll chat about your experience, and I'll recommend a great tax advisor. You'll need one to handle your earnings properly. If you found this class useful and feel like you're learning from this free trading course, imagine the level of knowledge you could achieve as a student in our premium trading course. If you've ever felt stuck in trading due to the fear of losing, lack a clear system and strategy resulting in inconsistent outcomes, or even if you have experience but struggle with emotional control, preventing you from being profitable, the solution is right in front of you. The only thing missing is investing in knowledge. Stop making excuses about not having time to learn or trade, because we all have 24 hours in a day, and if you manage your time well, you can carve out 20 minutes a day to learn. You'll find more info in the top right corner by scanning the QR code on the screen and through the link in the description. Click and let's connect inside the premium platform.